Hello everyone, this video is question number 3 of October-November 2023, paper 2 variant 2, and the question here is from incomplete records. It says Lionel started trading on 1st July 2022, so this is his first year of trading. He paid 15,000 of his personal money into the business bank account. This is capital, so the double entry for this would be bank debit, capital credit. So bank account will be debited, capital account will be credit. The question is saying here, he did not keep full set of accounting records. This is an indication that it's an incomplete records question, but has supplied the following information. So they've given you incomplete information which you need to complete. The first part is the income statement that you need to make. So we'll just read the information and try to solve try to solve to complete the information that much that we can make the income statement. They're saying here cash sales of 90,000 were made and paid into the bank account. No other money was received. Lionel marks up his goods by 50%. So what do you do when you have markup? So markup, always when you have markup, I can actually take out cost of sales from here. So markup, because in markup it's like this, that if the product was if it had costed me $100, right? So I'm keeping $50 as my profit. So I'm adding 50 to it and deciding the selling price to be 150. So whenever markup is given, you need to assume that cost is 100%. So cost of sales here is 100%, which I don't know. Okay, so I don't know that it's X. I know the cash sales here, the revenue here is 90,000, and this is basically 150%. So when I cross multiply, I get X is equal to 60,000, which is my cost of sales in this. So with this piece of information, I have taken out cost of sales. I can take out gross profit as well. Gross profit here would be 30,000. So revenue minus cost of sales is gross profit. So 90,000 minus 60,000 will be 30,000. Then they are saying payments from the bank. So these are the payments that they've made during the year. They have purchased a motor vehicle van, which is for 8,000. They have paid money to the credit suppliers, that is 55,000. They have paid wages 8060. They have paid general expenses 1140. They have paid for rent and insurance 5585. They have paid motor expenses 4992. Then cash drawn from bank obviously is basically money taken out from the bank. Then they are saying purchases returns amounted to 3,000. Okay. Then they are saying inventory at 30th June 2023 was valued at 4175. This is my closing inventory. Because I know this, because this is 30th June 2023. We started trading on 1st July 2022. And this is the first year, so we wouldn't have opening inventory, but we'll have closing inventory. Then they are saying 1/3 of the motor expenses paid were for Lionel's private car. So 1/3 of motor expenses, that is 1/3 of 4992 is for Lionel's private car. That is my drawings here in this case. So 2/3 of 4992 will be written in my income statement for motor expenses. So 2/3 will be written in my income statement. 2/3 of 4992 as motor expenses. 2/3 of 4992 is 3328. So that is for the fifth entry here. And then obviously 4992 minus 3328 is my drawings, because I'm paying for my so Lionel is paying for his private motor vehicle here. And then he's saying private motor vehicle basically it's his personal expense, which shouldn't be recorded in the business expenses. And then they're saying a full year's depreciation at 25% is to be charged on the van using the reducing balance method. So when you're charging depreciation on a van by the reducing balance method, I've always told this formula to my students: cost minus accumulated depreciation multiplied by percentage. Accumulated depreciation in the first year is 0. So for the first time when you're depreciating, you haven't depreciated it in the past, so there will be no total depreciation. So you write here 8,000 minus 0 multiplied by, so basically you're doing 8,000 multiplied by 25%, which will be 2,000. 2,000 will be your depreciation for the motor vehicle. Then they're saying Lionel withdrew 1,000 each month from the business business, from the business cash for personal use. So he's taking, whatever he's taken out from the bank, cash drawn from the bank, 1,000 every month was for his personal use, so that is drawings. The remaining cash drawn from the bank was used to pay wages, so that means the cash that he's withdrawn from the bank, that is 14,600. Of this, drawings is 1,000 multiplied by 12, that is 12,000. And the remaining is 2,600. Of course, 14,600 minus 12,000 should be 2,600, and 2,600 should be added to the wages as wages. So wages will be 8,060 plus 2,600. And then now I'll make my income statement. So I'll start with the revenue. So I write revenue here. I know the revenue is directly taken from the information given above. So you write here 90,000. Then you write here, you don't have sales returns. We don't have any information indicating that we have sales returns here. So there's no sales returns in the question. You directly go to less cost of sales. So you write less cost of sales after revenue. Then I need to write my opening inventory is the first thing, but you don't have opening inventory because it's this is Lionel's first year of trading. So you directly go to purchases. So I write here purchases. So the thing here is that you don't know purchases here, because the thing is that we have been given payments to credit suppliers in the question, but we don't know the trade payables at end. It's like that. If you have credit purchases, you should have trade payables at end to actually calculate credit purchases through a purchase ledger control account. But you haven't been given purchases here as such, because there's no purchases given. You have been given payments to credit suppliers that you have made, but you haven't been given trade payables at end, so you cannot use the purchase ledger control account to actually find out purchases. But I don't know my purchases, so I keep it blank. I write here less purchases returns. So purchases returns here is 3,000, so I need to subtract this. And obviously I'll get a value here, which I don't know because I don't know purchases. Then I write here less closing inventory. So closing inventory here is 4,175, which I need to subtract. Always closing inventory is subtracted. When I subtract this, I get a cost of sales value, which I know 60,000 is my cost of sales. So whenever I calculate backwards, so it's like this: 60,000 plus 4,175 will give me 64,175. And then when I add 3,000 to this, I get 67,175 as my purchases. So this is my purchases. 67,175 is my purchases here. Then basically this cost of sales, when you do revenue minus cost of sales, you get a gross profit of 30,000. So I write gross profit here. Then I don't have any other incomes because the question clearly says that no other money was received. This statement basically tells me there is no other income. If there was other income, then we would have received some money for that. So we directly go to less expenses. So I write here less expenses. So I need to write my expenses one by one. So I write here wages should be 8,060 plus 2,600. So I write here wages. I write here 8,060 plus 2,600. Then my wages will be 10,660. Okay, so 2/3 of motor expenses is for my business, so that'll be 3,328. So I write here motor expenses. I write here 2/3 of 4,992, which comes out to be 3,328. That is my motor expenses here. Then we have, I need to actually mark here expenses. Wages is expense, general expenses expense, rent insurance is an expense, motor expenses is an expense. I have recorded wages and motor expenses. I'll also record general expenses. So general expenses will be 1,140. So I write here general expenses. I write here 1,140 directly taken from my payments, the payment summary that they've given you. Also, rent and insurance will be 5,585. So I directly record that. There's no adjustment to it. So I write here rent and insurance. I write here 5,585 as my rent and insurance. Then we have depreciation, which we had calculated. Depreciation was 2,000, 8,000 multiplied by 25%. So I write here motor vehicle depreciation of motor vehicle. And that is 2,000. So now when you add all of these, You add all of these and you need to find out the total expenses. The total expenses will be here 22,713. You subtract that from 30,000 and you get a profit for the year of 7287. I write here profit for the year. So this is for 9 marks. This is my income statement. Then they are asking you to make a capital account here. Prepare Lionel's capital account for the year ended 30th June 2023. Balance the account and bring down the balance at 1st July 2023. Here, the first line says that on 1st July, basically on 1st July 2022, Lionel had paid 15,000 in the business bank account to start his business. So you start this on the credit side, you record this. Basically, bank will be debited. In the bank account, you write capital in the details. And in the capital account, you write bank in the details. So you write here bank, you write here 1st July 2022, you write here 15,000. So this is how you record it. You don't write balance brought down here because this is the first date when he started business and he invested capital on that date. So profit for the year will be added. So you need to record that on the credit side of the capital account because profit always increases capital. So I write here profit for the year. And I write here 7287. I need to record this on 30th June 2023 because profit for the year is basically calculated on the last day of the year when the income statement is made. And then you write here drawings. So drawings should be written on the debit side because drawings decreases capital, and anything that decreases capital should be recorded on the debit side of the capital account. So drawings are of two types. One is 12,000, that is cash drawings. Another drawings here was when we paid for our private motor vehicle, which was 1/3 of 4992, which comes out to be 1/3 of 4992 comes out to be 1664. So 1664 plus 12,000 should give you 13664. That is my total drawings. And then I get a balance carried down when I need to basically calculate balance carried down. Total of heavy side minus total of light side. Total of heavy side here is 15,000 plus 7287 minus 13664. You get a closing capital of 8623. That is my closing capital on 30th June 2023. That is when I balance my account. So this account will total to 22,287. So 22,287 on the debit side, 22,287 on the credit side, and this is how you balance it. Then the balance carried down will become your balance brought down. So you record that on the credit side of this account. You write here balance brought down 8623. You write here 1st July 2023. So that's it for the capital account. In the next part, they're saying state one reason why Lionel should keep double entry bookkeeping records. So double entry bookkeeping records everything in detail. So we have we actually basically, when you record everything in detail, you record every transaction in double entries, you have complete information. And when you have complete information, it is very easy to actually prepare income statement and statement of financial position. So it's easier to preparing financial statements is very straightforward. Also, once you prepare the financial statements, it's like more reliable. The profit for the year that you've calculated is more reliable when double entry bookkeeping records are kept. So that is why you need to make double entry bookkeeping records. And then they're saying here, Lionel makes cash sales only. So this is true because we started with this in this question. He's saying he would like to start selling on credit and is considering whether to offer a 10% discount to regular customers or a 3% discount for payment within 21 days. So 10% trade discount to regular customers. So you guys should know the differentiation between trade discount and cash discounts. Trade discounts are basically given at the time of sale or purchase. So for example, something is of the list price of something is the price on the label of some product is, let's say, $100, and you reduce it for a customer and you record, like basically reduce it to $90. That will be 10% trade discount. Okay. It's like your revenue, the total revenue, basically the revenue, the sales is recorded on $90 then. So what happens is when you give a trade discount, you basically make loyal customers. So you can write here in advantages for trade discounts. So advantages, so I'm telling you guys, you need to write this in paragraphs. I'm writing points here, but you need to write this in proper paragraphs so that you can get full marks. So you write here advantages of trade discount would be that more loyal customers will make repeat purchases. So when customers make repeat purchases, that will increase revenue. Also, it will increase profit. However, the disadvantage of this, so basically what you need to do is that there are two proposals here. So for the first proposal, you need to give an advantage and a disadvantage. For the second proposal, you give an advantage and a disadvantage, and then you give your recommendation. So here in the disadvantage, you can say that the disadvantage of giving a trade discount is that if it is unsuccessful and customers don't repeat purchase, so that will decrease revenue and therefore it will decrease gross profit. So if you don't end up making loyal customers, so that will decrease revenue and decrease gross profit. Also, this discount is recorded on the invoice, so it's like an additional entry on the invoice that you need to make. That's not actually a big deal, but you don't record this discount in the accounting records. You guys know this, that trade discounts are not recorded in the T accounts or or in the books of prime entry, but you show that on the invoice. So let's say my customer is taking something, and that customer is buying something from me, and that thing actually had a list price of 100, and then when I'm selling it on 90 on the invoice, I'll show that I've given a discount of $10. So that's it for the trade discount. For the cash discount, I need to say that the advantage of giving a cash discount would be that cash discount, the objective of cash discount is that customers pay on time. So you can receive payments promptly. So receive money from customers promptly. Okay, that's an advantage, that you'd receive money from customers very quick. And then another advantage would be that it'll reduce the risk of irrecoverable debts. So I write here, it will reduce the risk of irrecoverable debts. Okay, a disadvantage of this proposal would be, I'll write here disadvantage. A disadvantage of this proposal would be that it'll basically reduce your profit for the year, because discount allowed, this is discount allowed, cash discount allowed, and cash discount allowed is recorded in the expenses. So discount allowed will reduce profit for the year. Also, 3% may be a very low discount. So in my opinion, we can give a recommendation that he should allow cash discounts so that customers pay on time, so that it acts as an incentive. Also, trade discount 10% is too huge, so that will actually reduce profitability if customers don't repeat purchase. So we'll say he should offer cash discounts of 3%. So that's it for this question. Thank you so much for watching.